what I wanted to do today really is talk to you a little bit about what I've been up to over the last 3 years, some of my experiences working in this area, and to bring you up to speed with what I'm doing today. The last two presentations both have mentioned the word big data. I read a statistic that something like 90% of the data that's ever existed has come in the last 2 years. So we've kind of had this huge explosion of data. And a lot of this data, no doubt, has come from social networks, Twitter, Facebook, to name a few. So what I'm interested in is combining this data and combining it with trading and making investment decisions, buying and selling equities, commodities, stocks, currencies, and looking for ways that we can find value in this data and unlock hidden trading opportunities. So a lot of people, when they look at what we do, they think, how can Twitter possibly give value to a trader? You know, it's just junk, right? It's people talking about Justin Bieber or football results. It is, to a certain extent. I mean, there is something like 200-300 million tweets are posted on the Twitter network daily now. So it's a huge amount of information. But there is a lot of value within that information. And it's about finding that and filtering through that data. So what brings me here today? What was my inspiration? Well, I set up a company called Derwent Capital Markets going back 3-4 years ago now. I was working at a bank just over the road, and I was pretty bored, and we were going through a financial crisis, and I thought, I want to get out and do my own thing. I'd always been interested in trading, particularly quantitative trading strategies. I set my company up. I got my FSA license. I had a successful first year. I then wanted to expand the business and look at ways that I could grow. And I wanted to have a USP, something that made me different to all the other investment managers out there. And whilst I was working from a small office in a Regis service office in Berkeley Square with my brother at the time, I came across an interesting article on Bloomberg titled Twitter Mood Predicts the Stock Market. And I looked at this article. We're going back 3 years now. And I thought, that's interesting. That really fascinates me. I read the article in some detail, and it led me to a paper, an academic paper, which was published by a professor out of Indiana University in the States, a guy called Professor Johan Bollen. And what he'd done was very interesting. He'd taken 6 months' worth of historical Twitter data, the full Twitter fire hose, so every single tweet that came through the network through that period. And he wanted to see if, when the stock markets fell, did that affect global sentiment? Were people feeling a little bit down, a little bit depressed? And vice versa, when the markets were rallying, were people more upbeat? So his hypothesis was, does stock market movement affect global sentiment? So he took this 6 months' worth of data, and what he found was quite astonishing in that it was actually the reverse. He found that human sentiment, emotion, globally was actually the leading indicator to market movements. And when he correlated historic sentiment over this 6-month period and overlaid it with movements of the Dow Jones Industrial Average Index, the American market, he actually found that he was able to predict the daily direction of the Dow Jones, not necessarily the magnitude of movement, but the daily direction 3 days in advance, approximately 3 days, with an 87.6% accuracy, which is absolutely astonishing. So that was kind of my inspiration behind getting into this area. And I was fortunate in the sense that I contacted Johan. I was fortunate to meet him 3 months later and had a whole day with him. And we looked at ways we could capitalize on this technology. So I wanted to actually buy the technology from him, but because it was developed on the university campus, it wasn't for sale. They have a policy where they don't sell anything. They just license it. So we got an exclusive license agreement with them. I decided to build a hedge fund, launch a hedge fund. Took us about 9 months and a lot of hard work to put this fund together. We got a lot of global publicity around the fund, I think because we were kind of the first guys doing this. It was sort of very innovative and cutting edge. And we launched exactly 2 years ago today, 1st of July 2011. And we raised initially just £650,000 in the fund, which was very, very small. We did have a lot of interest from family offices, institutions, funds of funds, who were sat on the sidelines kind of watching us ready to make an investment once they felt comfortable. Now, we delivered a 1.87% return in our first month, which is July. We then hit August. August, America lost its AAA rating for the first time in history. We experienced a huge amount of volatility in the markets. And all the investors that we got sat on the sidelines who were kind of interested in what we were doing, we're talking about $25 million worth of money sat there. They just suddenly ran for the hills. They said, these markets are absolutely going haywire. The FTSE lost 1,000 points in 10 days, and they decided they wanted to put their money in gold, government bonds, et cetera, et cetera. So sadly, we had to close the fund very, very quickly after we launched it in August, which was a great shame. So where are we up to today? I've spent the last year and a half building and continuing to improve these strategies. And initially, we were focusing on just sentiment, and we were trading the major indices based on sentiment. So if we saw overnight a big drop in global sentiment, we would take short positions on the major indices like the FTSE and the Dow, and vice versa. But what we're also focusing on now is finding and discovering events and news before it breaks onto the global marketplace. So if we just look at Facebook and Twitter combined, you've got about 1 billion monthly active users there. That's approximately 18% of the world's population, and that's in the developed world. So you've got a lot of eyes and ears experiencing, witnessing events every single day, every minute, by every second. People expressing feelings, how they feel about something, what they're witnessing, and that provides a very rich set of data to a trader or an investment manager who can filter through this and find events that occur before they break out into the press. So we'll go have a look at a little example. Here you've just got a person walking their dog along the river, Bosphorus River, for example. They looking out over the water and they see a oil tanker. They see an explosion on the oil tanker. They're obviously startled. It's an unusual event. Pull out their mobile phone, their iPhone, whatever it is, go straight onto Twitter. They feel the need to kind of just tell this, express this to people, to their followers. And this person puts OMG or oh my God, I just saw an explosion on an oil tanker whilst walking my dog along the Bosphorus. Now that tweet in itself contains some very interesting keywords that we're filtering through every day. OMG is a big statement. Explosion, oil, tanker, Bosphorus. Keywords that are all contained in one tweet. So we've built technology that's filtering through billions of tweets day by day, looking for specific keywords and alerting us to information and tweets that we believe are going to have an effect on a share price or a commodity or a stock once that information gets picked up by the press and is spread around the world. So what's the revolution then? Why is this disruptive? Well, if you look at the traditional way that traders pick up news and information, they look at CNBC, Bloomberg, BBC, Sky, Associated Press. Now, these organizations are limited by the number of reporters, agents they have on the ground, picking up rumors, writing stories. My belief is, how can they possibly compete with 1 billion people around the world, in all corners of the world, witnessing, experiencing events, and within seconds of seeing these events, posting them on a network, a public network where people can pick this information up. Companies like DataSift, Ganip, Dataminer, they're three companies that are very pioneering in this area. DataSift and Ganip, they provide, through their API, access to all these social networks. So you can subscribe to the full Twitter firehose if you want. You can add all the other different networks, YouTube, Tumblr, Facebook, and you can take this information in an API and build your own systems and algorithms to take this information in. Dataminer is a very interesting company. They've taken it a stage further. They've built their own platform which will alert you. You can customize it, but they use their own underlying algorithms, and it will alert you to events as they happen and as they occur. So what I've noticed over the last 2 years is this combination of social media data and financial markets and trading is slowly starting to gain acceptance. Earlier on this year, the SEC announced that Twitter was an approved medium for large organizations, publicly listed companies, to release information or corporate data or news about their organization, which was a big kind of stamp of approval in recognition of these kind of networks. Recently, Dataminer, who I just mentioned, they've just raised $30 million through a Series B second round funding phase. They'd already raised 16.5, so that takes them up to $46.5 million of capital. This is just 28 guys in New York, small team, and that shows a lot of confidence from investors in this area who they see strong prospects for growth. So let's have a look at a couple of recent examples. There was a cruise ship cruising through the Caribbean earlier on this year, Royal Caribbean cruise ship. About 120 passengers were very sick and ill on board, and it turned out they had the norovirus. No one really knew about this yet. It hadn't got out into the press. Someone on board put a tweet out saying, announcing that a lot of people on this boat were sick, were having to turn around, make an emergency run back into Miami for medical assistance. This tweet, if you'd have picked this tweet up, 40 minutes later, the stock price of Royal Caribbean was down 2.9%, almost 3%, which is a considerable move. So that's an example. If you'd have picked that information up using filter systems, real-time filter systems, you could have made a profitable trade. Another example, which has really highlighted this area and raised the profile, is you'll probably all remember the AP tweet not long ago. I think it was like 2 months ago, 3 months ago. Someone hacked into the Associated Press Twitter handle and put a tweet out saying, explosions in the White House, Obama injured, but he's okay. Now that's a hugely powerful tweet. It contains the word Obama, White House, explosions, and is coming from a Twitter handle that is an authorized Twitter handle with a vast amount of followers. And as a result, the Dow fell 200 points in a very, very short space of time after that. So here's just a very brief, sort of high-level overview of how we filter through this data. The first thing is we use a multi-filtration system. So we've got to get through all this noise, all this junk, and find information and find tweets that contain stories or news that's of value to us as traders. So we use a layered system. So initially, we'll look at, I'll give you an example. Let's pick a company like Falklands Oil and Gas, which is a small oil exploration company in the Falkland Islands. It's listed on the AIM market. For that company, we'll build a lexicon of keywords that are relevant to that company. So for example, Falklands, oil, gas, explosion, rig, discovery, find, all words that would be of value to us. And what our system does is it filters through all the tweets, and if a tweet pops up and it has maybe 3 or 4 of those keywords contained within that tweet, it will alert us to that tweet. We can then look at that tweet and we can say, okay, who's this tweet come from? How many followers do they have? If they have 200,000 followers, that's different to them having 3 or 4 followers. It's more significant, obviously. Where's the tweet come from? What's the geolocation from that tweet? If they're saying they've witnessed something in Manhattan, but the tweets come from Hong Kong, is it real? And also, are other people tweeting the same thing? Have they witnessed the same event? Are we getting tweets coming from other areas verifying an event? So this is all part of the decision process behind actually executing a trade on this information. And then once a tweet comes through to us, to our trading floor, we then make that manual assessment of that tweet. And then we then make a decision on what instrument is this going to affect. So for example, on this tweet that we're looking at, anything to do with oil supply, anything to interrupt oil supply means oil crude price is going to go up. So in that example, you could make an assessment, long crude, for the next 48 hours, place a stop loss, place a limit order, let the trade mature, wait till that news breaks out into the market, and then let the trade execute itself. So to summarize, big data is here to stay. These social networks are only going to grow and grow and grow. And I just think we're at the very early stages of financial institutions, hedge funds, banks, using this data to make better informed trading decisions, whether it's for themselves, whether it's for their clients, whether it's to manage risk. It's a data explosion that contains a huge amount of information and valuable information. And it's going to be very interesting to see how this progresses over the next few years. Thanks very much.
So Paul, you're not really discovering truth in a journalistic sense. You're just discovering something in a short time period that could move a market.
Yeah, that's right. So a lot of people say to me, even if the tweet or the contents of the tweet isn't true, what if it's fake, if it's not real information? If it moves the market, that's valuable to us as traders. And the AP tweet was a perfect example of that. It was actually fake. It was someone hacked the handle. But because of the fact that it came from a handle that had hundreds of thousands of followers, and it was from an approved handle, it moved the market. So we're looking for news that we think will affect an underlying asset price and acting on that information before it gets out into the press, and other people will act on it.
But there are an awful lot of people tweeting about strange things they're seeing. There's going to be so much noise, it's going to be pretty hard to identify something significant unless it's a verified Twitter account or unless it's a well-known person who's got 1 million followers, surely.
Not necessarily. I mean, it could be... I have a little personal Twitter account. I think maybe I only have 50, 60 followers. But if I see an event, if I'm walking down the street and I see something of significance and I tweet that, it still doesn't mean that that news isn't going to eventually break out, into the main press. So it's not so much necessarily who it's coming from. It's just what that news is, and is that going to affect an underlying asset once it breaks out into the market.
So what's going to be news in about 20 minutes when Kevin Slavin's finished speaking?
Let's check Twitter and see.
Thank you very much, Paul.
Thanks.